Good morning, everybody. Welcome to the Flow Show. It is Thursday. Two more days to go, and then it's the weekend again. Morning, Kay.
Hey, good morning, Ryan. Good morning, everybody.
Cool. How's it going this morning, mate?
Yeah, all good, all good.
Yeah, we had a bit of a quiet day yesterday, wasn't it, market-wise?
Yeah, dollar doing pretty well against the majors at least, but for the rest, yeah, it's been a bit of a sleeping and sliding session.
Yeah. Well, a few bits and pieces going on. A lot of geopolitical headlines still banding around, which will crack onto those first and foremost, I think. Firstly, while we're going to start in Asia, there was a Reuters poll out overnight, and apparently analysts have now turned bearish on all Asian FX. This is a bit of a pivot, is the apt word, from how their stance a few weeks ago, month ago, where they were all bullish. And the reason for their bearish turn is because of this renewed hawkishness over the Fed and potential for rates going higher. That's obviously put the dollar on the front foot, and that's being felt across Asian FX. That's obviously evident in a pair such as dollar yuan, which, as we know, has made the move higher over these last couple of weeks. Again, the dollar side mostly the driver behind that. So Asian FX potentially looking bearish as far as analysts go. How many analysts trade is another question. While we've got it on dollar yuan, the PBOC fixed the reference rate at 90.28, so right up. They brought that up from 87.59 in yesterday's fix. So they're happy to let this move continue. The fixes are something we keep half an eye on. Sometimes they matter, sometimes they don't. In this case, it might matter, as I say, because they've ramped it much higher, right up closer to where we're trading. It does suggest that they're happy to let the rate go for now. The signal you get if they keep the fixes lower is that they're less inclined or less wanting the rate to move higher. So that's a bit of a potential signal there. We'll see how they carry on with the fixes on that one, if they continue to let them ramp up. We are up against that 691 level, been highlighting for quite some time, not making a break above it yet, or even a proper attempt on it, which shows you that sellers are likely protecting that level around this 90, 70, 80 area. Putin had met with his Chinese counterpart, or a Chinese minister. Can't remember what he was. Wang. He said China's trade goals may be reached earlier than planned. Putin also said will pay increased attention to strengthening the country's nuclear forces. China's Wang, after that meeting, or during that meeting, said our relations will not succumb to pressure from third countries. We are ready to deepen strategic cooperation with Russia. Now, as I said, there has been further comments. Obviously, Biden has been traveling around that area as well. Lithuanian president said that he proposed to Biden that they want him to deploy HIMARS artillery and attack helicopters and air monitoring systems in the Baltics. Polish President Duda said he told Biden he would like US soldiers to move equipment to bases in Poland. So all the countries surrounding Ukraine and Russia are potentially looking to bolster their defenses. That's not good for risk, because as they do that, Russia responds in kind. There was a news piece out overnight from the Russian Foreign Ministry regarding Moldova, saying that they are aware, or they believe, that Ukraine is looking to infiltrate Moldova under the guise of Russian Federation soldiers and army. They will respond if they need to that situation, which sounds like a precursor for a bit of a false flag operation, and Russia steaming into Moldova, pretending it's the Ukrainians that are doing so. So still, this situation is not showing signs of abating. Risk isn't taking too much note of it, but I still can't help feel the more we get all these headlines, the market is going to sit up and take notice at some point. What do you make of it, Kay? It's not going away, is it?
No, absolutely not. We started to talk about it a couple of days ago, and it's just it seems like verbally, at least, there's a escalation. The Moldovan president also started to raise alarm. It's not taking the right way, and it's a situation we have to monitor, and hopefully it will never come to anything dramatic, like a Ukrainian situation, but we really can't rule it out, and so we have to pay close attention to that. And all of a sudden, risk or the euro or anything may start to falter when some bigger boys decide the situation is getting out of hands, and all of a sudden we could have like very big moves. We have to just be ready for the unexpected, right?
Yeah, exactly. And this Moldova thing, just reading that tweet that I posted in our newsroom yesterday, it just sounds, if Putin makes a move into Moldova, then that means that's the second country he's steaming into, and the market's going to take a very negative view of that. I'm not sure how far around this tweet went last night, that news piece, but yeah, we could be one headline away from seeing some serious risk moves. So if you're trading, you should have some stops in play anyway. If you're one of these people who don't trade with stops, at least have a disaster stop in, something 200-300 pips away outside of the market, in case you get a flash move. You don't want to be doing your account on a black swan event when you could well avoid it. So even if you're not sure your stops, have a disaster stop in play anyway. While we're talking about China, China's cabinet says there's still room for policy support for tax and fee cuts. They're still looking to bolster the economy and use potentially fiscal policy to help that along. Over to New Zealand, RBNZ's Orr said monetary conditions need to tighten further, but on the 75 pip conversation said would need significant inflation shock to return to 75 basis points. So although it was potentially on the table at the RBNZ, he's moving a bit more away from how close they are to going back to a 75 pip or using a 75 pip. On the storm and cyclone issue, he said that pressures may require rates to stay higher for longer on what happened over the cyclone situation. So definitely no signs of easing on that side of things to do with that. RBNZ's Conway says he sees more uncertainty around forward GDP track due to the cyclone. So a bit in the mix there. Bank of England, Mann was out this morning saying more tightening is needed and a pivot is not imminent. She's one of the big hawks. 2 meetings ago voted for a 75 pip hike, while the consensus was a 50. Carrying on that more hikes are needed, and don't even think about a pivot for the Bank of England. We'll see about that. Not much out on the data yesterday. Let's have I don't know if it's worth putting it up even. The only couple of things of note was the MBA mortgage applications. That had another steep pullback, down 13.3% versus the prior, down 7.7% on applications. As you can see there, a big jump in the mortgage rate. You can see the index components, purchase index dropping back, refinancing index dropping back. So we had a bit of a early year optimism coming into this year, saw some positive numbers. Now we've got 2 on the trot and quite significant pullbacks as well. So maybe we're not going to see the housing market picking up into the new year. We had started a bit of a trend that might be going into reverse now. Bully Bullard was out with his usual guff yesterday as well. His projection has rates reaching 5.375%. So that's the middle line in between a Fed funds rates of 5.25 to 5.5%, which puts him up at the top of the ceiling as far as the dots go. He still thinks we can get inflation down while maintaining a strong labour market. We'll see next month if the Fed numbers come in the same way as they did in January, that big over 500k number. I still think there's a bit of a risk we see a washout. Some new year modelling calculation factors that were in the January numbers may wash out in February. So I wouldn't be surprised if numbers came in soft in February. That's in a week or so's time. The minutes came out, not much to take from that. Most of the wires picking up on the headline that a few officials favoured or could have backed a 50 pip hike. That's not a surprise given what we've heard from the likes of Mester and so who have been talking about the possibility that 50s are still in their mind. And Russia again, they're planning to cut crude exports from their western ports by a quarter in March and February. So price caps coming in on the European side and Russia responding on that side. So I say a bit of a quiet one on the headline front, quiet in numbers, not in quality. You got anything else you want to throw in the
data front? Nothing at all. The only thing that, and that was late in our day, was that Williams was quite adamant on the 2% inflation target in the US, and I reckon he responded somewhat to what is a couple of people saying that perhaps they should think of putting the inflation target higher so that they can pause earlier. But he's one, and he's a bit of a neutral guy, right? So I wouldn't have expected him to fight against that in so much words. So and he said he's the Fed is absolutely committed to the 2% inflation target. So that I think has put another bid under the dollar, or at least keep yields higher, together with the FOMC report.
Yeah, and I can't remember if it's the RBNZ or the RBA. You also were mumbling about their inflation targets and keeping them set. I think one of them was questioned whether they raised to 3% or something, and I said no, we're keeping it as is. Maybe that's something that's going to factor into conversations over the months ahead. You know, if inflation stays up, the questions come in over whether they're going to move the goalposts on inflation targets. Yeah. We obviously know that the ECB's mandate is close to but below 2%. So, yeah, it won't surprise me if you got some accounting moves if inflation doesn't come down.
But it won't be in the next meeting, right? And that's something that's going to be for well, I don't know, end of Q2, start of Q3, perhaps.
Much later in the year.
It remains sticky. I don't think it's in the Fed's government council mind right now, the FOMC people. I don't think it's there. We will see on any of the next meetings whether there has been any discussion around it, because that would already be taken by the market as oh, they are ready to move, and we could see some moves on the back of it. But it's quite funny that he found it necessary to react to it.
Yeah, exactly. Yeah, I mean, it was. I saw the comments, but I didn't see them as that important personally. But you're right. It is something that potentially is going to come into conversation later on. Just looking at the rest of the day ahead, we've got US GDP. I think this is a second reading, possibly the third reading. I lose track after 8 of them. I doubt it's going to be much of a move unless there's a big variation in the numbers, which can happen now and again when you get the revisions coming in as more real data comes in, because when we get these preliminary readings, the first numbers, sometimes it can only be something like 30 to 40% of it is actual data and the rest is all estimated, and then the further data gets dropped in thereafter. Keep an eye on initial jobless claims as well later on. And what else have we got coming up? There's something else. Tonight is Japanese CPI, national CPI numbers there. Core CPI expected to jump to 4.2% from 4% prior. This is also going to be coming alongside hearing from Ueda in the lower house tomorrow morning as well in Tokyo time or Japanese time. So a bit of a risk for Japanese pairs or JPY pairs this evening, tomorrow morning. Keep an eye on that one. Could be a bit significant if we get a high CPI number there and a dip in yen pairs in something like dollar yen. I don't know. Might I get a twitch for a little bit of a dip buy if we see a significant move lower? What do you make of that, Kay?
Yeah, get a high print. The market will probably speculate a bit more. Okay, some of the yen pairs have been coming off a little bit, but then okay, due to the dollar interest rates and whatever, dollar yen is holding very close to 135. If we get a high print on the CPI tonight, there may be some short-term speculation on what's to happen, but the main event is tomorrow, and now he should be saying what somewhere the plans will be without perhaps putting too much detail on it, but it's Japan as well, right? So he's going to talk in the sense that in the way that the Japanese officials want to hear it. So
Yeah.
I don't think we got anything world shocking tomorrow, but he could set out a few plans. And if it is in the sense of yes, we are going to move away from the YCC, we are going or widen it, and we are going to gradually move away from negative interest rate policy, etc. Coupled with a higher CPI tonight, that could actually put a serious bid under the yen for a while. But you have the other side of the medal as well, right? If he goes like all mellow and saying like, well, I don't think he will say that they will keep everything in place, because that is not what we nor the market is expecting. It would be a shock to me, at least, if he would say like, oh no, we're not going to change anything. Kuroda was the greatest sake samurai in history, so we are going to keep going. That is, to me, a recipe for dollar yen back to 145 or so. But
Yeah,
he won't. Japan needs to get out and needs to finally use this window of opportunity to get out of this straitjacket and get moving. Now, the big question to me, as usual, and I've been saying that already, is that how fast is it going to go? If we are in a very slow grinding process, and you see like really small tweaks every meeting, it's going to take them ages to get out of it, right? And somewhere I think it is a risk or a possibility, because he is an academician. He is also a very good economist. He understands the problematic of the government as well, because I'd like to repeat very often that they have put stimulus package after stimulus package in place for the past 2 decades. And to me, if he takes this into account and voices it, that's not going to be good for the yen in turn. So it's going to be important what's being said tomorrow or not said, in my opinion. So I think for the time being, I'm completely flat in yen. I don't want to have anything going into it, and I don't think I will trade the CPI either. But it's going to be interesting tomorrow.
Yeah, definitely. I mean, I think it has the possibility of being a really volatile event. the thing with Japan is, even the nuance of just a single word change or something can send yen going potty. So it might be we have to sit back over the volatility and then, analyze what he actually said. He could turn around and say, yep, I'm going to be looking to lead the bank out of this ultra loose policy, and the market dumps, or, yen pairs dump 300 pips. But then he might turn around and say, but we need wages to pick up and we need inflation to pick up, and that might take 5 years. And that move will do a complete 180. So it's a bit folly trying to nail down exactly what he might say in the different permutations he might say it in. So really, it's a case of see where we are tomorrow after we've heard what he said, make a decision then we can look at the potential long-term ramifications for the yen thereafter. And that's really the only way we can play it, because there might be a lot of chop tonight. Either way, he's either going to be hawkish or he's going to be dovish, or depending on how you view him. So one way or another, we're going to get something. But as I said, keep an eye on that CPI data as well, because that could be a mover. If I see that come right off, because I'm short, I may even look just to get out some of my shorts at better levels, just on the risk thereafter. But we shall see about that.
I was going to say, indeed, Ryan, if CPI in turn comes off tonight, we could be entering tomorrow around 136.5, 137, right?
Yeah, exactly.
So we have to take a lot into consideration now for the yen.
Yeah, I would be more inclined to buy a dip on a good CPI number to hold into his talking than sell a rally over on the CPI number, because take the other side of the coin, the dollar is still pretty bullish. So there's going to be dip buyers in dollar yen if yields are staying up, and you get a decent dip there. So if you have to build a wall, which side's got the most bricks? I think the bullish side for the dollar, and thus dollar yen, has more bricks than the other side. So it's the path of least resistance is potentially buying dips rather than selling rallies on the risk as well. So potentially lots of stuff to trade there. Ali, you're short both Aussie and Kiwi. Target 62.02 and 68.92. Do you mean 67.92 on the Aussie? Because we're trading 68.19 at the moment. So I think you mean 68.72. Let's have a quick look at the Aussie. So for me, we had this test of the 68 area, 67.90. Couldn't quite get down to that fib that we've been keeping an eye on for quite a while. Let's have a look at it on there. Bounces are still pretty weak. We moved under this 68.50, which is a bit of a S&R area. We've held below earlier. We couldn't really get up to it after the move down to 68 yesterday. So, it's not looking very strong at the moment. It's looking a bit of a similar picture to what we had all the way down from the 70s, weak bounces and continued new lows. So the bearish trend is still in play. So you are on the right side, Ali. I don't know where you're short from, hopefully way above. If we get back above 68.50, then we need to look at the zone again. If that confirms as resistance once more, then that keeps the bearish pressure still going and gives it some legs to potentially move to fresh lows and through that 68 handle. If we do get above, we're going to be looking at what happens around 69 again to see whether we've broken this move or it's just another area where the sellers come in at better levels and then decide to push it back down. So it's still open from here. Still bearish in my opinion, at least in the short term. Going to be interesting to see what happens at this fib 38.2 of the October swing up. For the Kiwi, it's still really finding decent support of this 62 handle, maybe down to 61.90 we can call it now. I'm not sure what to do here. I think I'm getting a bit inclined to maybe look at some sell stops. I mean, the bounces again are pretty weak. So, 62, 50, 60 is where we've got to get above if we're going to try and turn this around. But we keep bouncing off this level, and we've had several knocks at the door now. And when I see things like that, I start thinking about maybe a sell stop just under, maybe through 85, 80. If we do get a break, there's likely to be some decent stops there, and maybe we get a push down to the low 61s in the first instance. So I think your shorts are good for now, Ali. Just keep an eye on your upside levels and what happens if we don't break this area. The longer we don't break this area, the more chance we have of moving, back up maybe to the 63s. But if you get the break, it should have some decent legs in it. So yeah, maybe it's worth, one way you can trade is, if you're short above, you take some off as you get down to your level, you leave a little core position in there, and then you reload on the rallies and you take some off if it comes down. And that way you're putting money in the bank. But if you do get your break, you're not out your trade completely. You've still got some in there that you can manage, build up a little core position, and you can sit in that and see where it goes and manage it lower. That's how you turn a short-term trade into a more longer-term trade. Try and push your winners as far as they can go. But that's not for me to tell you how to trade, my friend. Just give you some advice on that one. Just looking around some of the other pairs as well, we're just talking back to dollar yen, and it's becoming a bit significant that we can't get above and hold this 135 level. And we can't do that and maintain those moves even while US 10s are keeping on the high side in yields. When we got this first move into 690s is when we got the first move to 135 in dollar yen. We then made new highs in yields. And although we got back above 135, we couldn't stay there. So I think possibly we're in one of these moments where there is a strong correlation between dollar yen and yields, but when the one side runs into its own technical or fundamental levels, it becomes temporarily detached. And we might be there for dollar yen at this 135 area because it's not getting above and it's not holding even while we're still sitting high in these yields. So the price action at the moment is looking key for that. However, we are finding support down into the old area. Let's just zoom that in a bit closer. So the former 134s, 134.50 is acting as support for now. So we've got a tight range here, and it's going to be resolved one way or another. Either we bust up above it or we get back below it. If we go below, start to find resistance here, then maybe we're going to head down a bit further. 133.50 is maybe down to the big figure. Again, we've got some big events coming up, so you've got to take the risk price action maybe out the mix, see where we're closing again on Friday. If we're closing above 135, then potentially we've got the legs to have another leg higher. If we're below 135 and maybe below this zone, maybe the picture short term at least turns a bit more bearish. You seeing anything significant in dollar yen at the moment, Kay?
No, I mean, no, it's we're hanging here because of the yields, and we are not going further because of what's to happen tomorrow and perhaps tonight already on the CPI. But I think the market just manages whatever needs to be managed, and I'm not reading too much in the current price action, but the levels tell us yes that this 135 is seen as relatively important. Could be. I was long like a week or so when we had this dip the other day. We were live, by the way, on the CPI down to 131.60. I managed to grab them there, and then I took the last bit off when we came around here 134.90 last week or so, and since then I've had a little bit of euro yen, but I'm really staying out because I do think that tomorrow has the potential to be a big mover. So I don't see, if not in a position for longer, like you are, for instance, then that's a different story. But if one doesn't really have the position or the strong view on a direction in the yen, I don't think it's worth even trying, because we could go 20-30 points above and then come back, and same thing, we could go down to 134.40, 134, and then come back as well. I don't think it's just very random into tomorrow.
Yeah, no, agreed. Gavin, you're asking about the bond futures, I think.
Yeah,
on that one.
I can have a look at that, Ryan.
Yeah, you got them up. Yeah, because I always look at yields. Yields is my.
No, I'll have a look at both. I'll have a look
Yeah,
at.
that's cool. And Swissy, Ali, you're very active, mate. Ali's in Swissy. I did actually try a little scalp in dollar Swiss yesterday because we got a fairly significant move over the fix yesterday. So up in this move here, oh no, where am I going? Back here, quite a decent move. No, tell you lies. Back here, we had the move up in the fix. So I did try a little tap there, but I got in at 93, and it really hasn't dipped at all from there. And it's it's pushed on up above 93 now. So dollar Swiss is looking fairly bullish at the moment. Euro Swiss, bit of a sideways action here. So not really sure which way this one's going as well. It's again, as Kay mentions often, you got the S&B trading both sides of it. So if they want to keep it contained, then they're not going to let it run too far. We did have that move up to the parity level. It just doesn't seem to ever hold up there when we get up there. We've had a few goes at getting in there, and it just fades out, and we come back to this sort of middle ground around the 98s, 97s, 99s. So really, I'm not too sure what happens with Euro Swiss here. Not one I'm overly keen on trading at the moment. Kay, do you want to have a little wander around?
Yeah, sure, mate. And let me straight away go over the those yields and Gavin the ZN there. Share screen. Where am I? Here. Okay. So this is the US 10-year yield. You can look at the shorter end as well. I mean, the twos are still pushing up. So as I was showing already, to me, this 395 is a bit of a level, and we are turning around. And for the time being, hesitant to take the next leg higher. But I have the impression that we could push a little more. I think we're just waiting now to see what the Americans will do with it when they walk in. But after the FOMC minutes and then taking into account the rest of the data that we had, I wouldn't be surprised if this pushes through a little bit. So then that brings us to this to the 10-year T-note futures. There was a lot of talk about this 111, 20, 30 zone, right? And we are through. So yes, Gavin, I am with you. This looks like we may push at least into the 23.6 here at what is it, 110.18 or so. So yeah, it does feel like we could be pushing through a little bit as well. And I'm not going to stand in the way of it. If it would, I'm not really trading the futures, but I'm trading a lot of dollars on the back of stuff like this. But yeah, it does look like this thing is still looking weak. We have to get back above this 111. 2030 zone to get more into neutral territory and perhaps move back into the 112s. So yeah, I can't disagree. This looks like we may be in for another push, at least down to 110.18. I'm not 100% sure what that would mean in terms of real yield, the yields, because there's speculation of this, and then the yields they can diverge a little bit, right? Because there's a lot more speculation in the futures market. So it could be that if we get down here, the yields only reach just 4% or so. The one interesting thing is that we've seen again, and I'm putting it a little bit shorter time frame now, the differentials in the short term. We sometimes, as I've said, I mean, most of the time, if you look at euro dollar, don't look too much further than what's happening here. And we have seen this gradually come down again. It's not huge move, right? But we have lost about 10 BPs here or increased. This is EU 2-year yields minus the US 10-year yield. So the deeper it goes, the wider the difference between the EU and the US rates in the US favor. Okay, so this is the easiest way to look at it if you overlay it with a euro dollar, for instance. It's not 100% correlation, far from there. Otherwise, it would be a bit too easy. Yeah, this is also the reason why we are ticking a bit lower. It could be, you know, this combines sort of what Villeroy was saying, what the FOMC minutes then showed us, and then market taking into account everything. I'm not 100% sure it can go a lot further. I think in the next 7 to 8 BPs, we are going to be finding some support here, because the ECB is clearly still on the hiking path too. So I don't see too much reason for this to widen much further. But the US being the biggest market, when US yields go higher or the futures here go lower, being the biggest market, dollar will still be both. Now, that being said, if we look at the euro dollar, as you know, I haven't been really involved in too much in the euro dollar, but I've had a few quick in and outs. Yeah, but I've done a lot more other dollars than the euro because of the ECB and because my view on the crosses and stuff. We are here at 105, call it 80, 106, the figure. We are here, and that to me is going to be the gateway to what I would argue is going to be a much bigger zone. This is the January low. This is the first trading day of the first couple of trading days of the year. We had this first spike down, and then the other one, and that really sounded the end of rang the end of that dollar rally, and then we moved up to 110. So this is 104.80, and then we have the 38.2 of the whole move here comes in at 104.60. I think this is going to be the zone for me, at least. It's going to be the zone, and unless we see those US data continue to outperform European data, specifically for the euro dollar, I am starting to think this may be enough for this round. But we will see if we are there's no guarantees, but we will see if we get down there. I'm going to be very tempted to start picking some up here, because it's also a prior spike here, spike there, spike low here. This zone is going to be important, in my opinion. So that for the euro dollar. If we start to we need to get back above 106, 30, 35 for a starter, and then of course this 107 area is going to be a first serious hurdle, in my opinion, if we have to start rising again, or at least stabilize. Right, euro sterling. It's hard. It's hard to pick a side here. I know a lot of people are looking for a deeper move, and I would not. I wouldn't say it isn't possible. I do think that there is a possibility to reach mid 87s. The way just by the price action. Also, with not really specifically man, but I think the latest data have been a little bit better for the sterling as well. Perhaps the differential that we saw or that we can expect in speed between the ECB and the Bank of England is neutralized a little bit. Also, with this outlook, I know the market has not been really traded too much of it, but the Northern Ireland situation, if it somewhere gets resolved, we could move back down to 87 and a half, 87.60. That's a lot of people have this as a bit of a target, this zone as well. So it's possible. if in turn we start to move back above 88.30, I think it's prone for a little move higher again. I have nothing in it for the time being, just waiting for my 88.5 call tomorrow to expire. Been trading it around more than enough, so I'm happy to just let it expire or start selling again if we are above to manage it. Yeah, Bran. Yeah. How about cable? Cable, to me, is quite neutral. I think I've been saying that already a couple of times, but to me, the levels are really here. This zone here, 119.80s, and on the top side 121.45. I don't see. Yeah, and I know people have like inverted head and shoulders and stuff, but I'm not really playing this for the time being. I just look at it a little bit wider, and the only thing I can note right now is that it's moving with the dollar. The dollar is the driver there for the time being, because if you look at euro sterling, for instance, it's relatively flattish for the time being. So those are the levels to me in the cable. Yeah, we can put tighter ones in there if you're playing intraday, which was around this 120.25.30. I think it came in somewhere as support, but I'm not really too keen on doing this. This one, dollar yen is of course going to be the driver because that's the main instrument. But interesting, euro yen, we have come to retest the support again. So this is the one that I was playing the whole time. And when was it? Yesterday, the day before yesterday, right? Or no, the day before yesterday already. I took profit on the last bit. I had an offer in at 144.20, but that just didn't reach. So I went to market 144.13. People in the room know that. I'm updating everything live. And now we are back here, which is a bit logic somewhere if we're in the advent of a big event. So this one's going to be an interesting one tomorrow if we start to fail here after what Ueda may have to say, or if he's not giving us too much. I think this could then start to reach back high for higher levels, and same will be going on the dollar yen. Same will be for the dollar yen. As Ryan already showed, we're in that zone here. This is going to be make it or break it probably after Ueda, and then on the downside, it's 133.90, 134. Is 134 figure 10, a little bit below there as well, 133.60. I've got something, and then if we look at the longer term. So market is watching this, the 200, the 100, a bit of fib activity. It's all going to happen in the 136.5, 137, and then if you put the cloud on top of it tomorrow, the top of the cloud is at 136.90. So this to me is going to be a very, very, very important area on the dollar yen for tomorrow if we reach for the skies. Okay, so I think we have to really, really pay attention to what's going to happen. It's a 30-40 points range, but with moves that can be seen on the end, this is really worth watching the range, not only this perfect level, right? But it's all going to happen around 137, the figure, let's put it that way. And on the downside, in the more medium term, if we start to break below 133.2050, that's bad news. And then I reckon we are in for a move back down into those 131s where we bounced from last time. Just know that Japanese accounts are really watching these cloud moves. Okay, so keep a very close eye on where we are going into the end of the week tomorrow. And that for the yen. Moving over, I don't have much to say really on the metals. We've seen a drop last night in the in silver towards in the afternoon, and there's been rows of contracts. And thank you for that, Simon, to highlight that yesterday, because it seemed that it did have an effect of putting silver quite a bit lower towards the end of the day. I'm not really still not interested here, but I do have a bid here, right here on this one. I do have a bid here around 20.5, and that's been saying that yesterday already. I think if the yields continue to push, there is a possibility for this breaking 21. But around here, I'm going to start to be interested in starting to reload my longer term, and I'm going to be very patient and but gradually getting back into it. That for that. Sarah, why do Japanese follow cloud analysis? It's called Ichimoku, and Ichi is one and Moku is cloud, and so they are watching one cloud, and one could also be said as the one day. So most of the time they're watching the daily cloud. It's what the Japanese really invented. Yeah, absolutely. It's a Japanese indicator brand. I thought you would know that by now. But yeah, it's a Japanese indicator, so they are really watching it. And for people who are trying to extrapolate or trying to look at different stuff than what the Japanese are doing, some people look at the 1 hour or whatever clouds. They don't look at anything below the 4 hour. Okay, if you decide to watch clouds for less than a 4 hour, even a day, I'm rarely putting clouds on anything except one day, because that's the way the Japanese look at it, and I wouldn't find any reason why we would look at something else than what the main players are looking at, right? Aussie quickie, it's holding here, and it's holding also. Well, we haven't even tested it, as Ryan was already indicated. The 67.80, that's going to be the next one. I'm not very happy about this line because it's a while ago, and it's just extrapolating perhaps a little bit too much, but there's a small trend line coming in here, and we've done those 1, 2, 3 points. So 67.95 figure is where we should find support here on the Aussie right now. If it breaks below, then the 67.80 test is on the way, and probably mid to low 67s. I haven't got anything right now, but if it doesn't bounce quick enough, I think I'm going to try and accompany a break lower on that one. Kiwi, no change. If you look at it, I even haven't updated my chart, because the 62 figure 30 is really where it all matters. Yeah, put it at 61.95. But that's where it all matters. If that goes, I think the Kiwi may be in for a bit of a dive here. Confirm the prior low, 61.55. That may be it. But with the RBNZ being having done what they did, it looks like the Kiwi is also held up by the Aussie Kiwi right now. So an Aussie Kiwi. A bit of support here in the low 109s, but again, I think the 108, 80.85 is going to be important there for what's happening on both, actually, the Aussie and the Kiwi. For the time being, I'm not trying to fight it. I'd rather sell rallies in there, because I think there's a clear divergence, more than 1% as well, between the RBNZ and the RBA rates. One last one I'm going to show, and then I'm shutting up for today. Euromex, I'm really starting to itch here to take a lot of my core off. I think that in the medium term, we are on our way to probably 18s, but this is going quite fast, right? 3 negative weeks in the making. I've rarely. And I don't really believe in one-way travel, but this is really one-way travel. It's really it's making me quite a bit of money, but I'm starting to itch a little bit to take some off, you know. I think it could put up a fight anywhere between low 1930s and 1915. I might leave just a really tiny bit open, but I'm really itching now to reduce my position to the minimum. It's been an absolutely great ride so far, but sometimes we have to take profits and reassess a little bit. So
you know, if you turn that chart upside down, I think it would look a lot like the Aussie, where it went to 71s. And you know, when you get that feeling where it's not getting through, and you think, yeah, maybe it's been a good run, I need to think about the possibility of going the other way.
This one here,
that Euromex looks a bit, yeah.
looks
So
a
see,
bit
71.30 dipped, got up to 71, then up to 71.30, dipped, went a bit higher. You know,
and then
coming off a big strong rally from October. You know, like you say, things don't go one way forever.
Yeah.
And you've been in this game, you know, as long as I have. You get those feelings sometimes, don't you? Maybe the end of the road is nigh.
It's just it's just, I mean, especially when I see accelerations like we had this week. I think if I go back on it, just this week, where are we? No, look at the last 2 weeks. I mean, this is where I added back to my core shorts, and that's just start of February. That's 2 weeks ago, and in 2 weeks we have done 5%. It's a lot, 5%. Even for a carry trade, can sit there, and then people take advantage of the carry and the pips that they get on the funding. But then here, that means that a lot of people have entered it as well. And I wouldn't like to sit here and then all of a sudden we are seeing, and it could also happen if something strange happens in Russia also, for instance, or in Ukraine or Moldavia, that all of a sudden people say like, oh, we have to get out of risk, right? And all of a sudden we are trading back to 20 in this one, and I would really want to take advantage of what's happening now, and then reassess, and my account will be very happy as well.
Exactly.
Yeah, so the rest is dollar CAD, watch 135 the figure, already 135.15, I think, but could be a little bit. It's not really exploded with the lower oils right now, and I don't know what's happening. I think it may be may have to do something with the euro CAD as well. Again, we stopped at 144.5 and came back down. It's really developing to be a really strong level. It's the new 146.5 and the 144.5 euro Canada. So this definitely. This one looks a bit heavy again. Perhaps worth giving it a go if it goes back up a little bit.
I want to talk quickly because you were playing dollar rand, and Sarkis asked about dollar rand, and the effect of correlations. You know, the question is, I have a question. If you're looking to take at dollar rand, what do you use for a correlation other than pound rand? The thing with correlations is how you use them. Okay, there's two things. You know, obviously oil and CAD have a very strong correlation. But if you find yourself looking at the other trade, if you find yourself looking at more oil for an idea of what to do in CAD, trade oil. Don't go too heavy on the correlation. You look at correlations, you look at other pairs to see which way the wind is blowing. So if you're trading dollar rand and you look at pound rand, for me, you're looking at that to see, is any move in dollar rand a dollar move or a rand move? Now, if it's a rand move, you're going to see it affected in the pound rand or euro rand or whatever cross you like. So the correlation is to decide which is the driver. Is it a rand move or is it a dollar move? So that's one correlation you look at. But I think, you know, like you've said in your comment, when you trade cable, you look at stocks and other correlated pairs like the euro. Yeah, again, but you don't get too involved in all those other correlations or those other assets to trade the one, or you might as well go and trade those assets. Because what you can find out is that you spend too much time looking for reasons why your original asset is going to move. And if you're trying to get too many reasons from elsewhere, you're not properly trading the asset in itself. That's your first thing. You know, what is the asset doing? Why am I interested in trading this asset? And use correlations and crosses and other things just to get a bit of a bias, maybe a bit of a confirmation that the way you're trading is moving because of those factors that you're setting out to do. But don't go too complex in your correlations and too tight in your correlations, because they can take away from the fact that you're trading the original asset. So for something like dollar rand, Kay, what would you look at? Do you just purely look at what's going on in South Africa and the dollar, or
for the time being, it's you get a combination of the dollar, which is big, and the mess in South Africa, and then also this and I said it straight away when those Chinese were and the Russians were trying to were actually because I think they've already sent some ships in front of the coast of South Africa, getting them involved in those naval drills. That was already a bad news, and then everything that's going on with Eskom, the rolling rollouts. The government yesterday said it would be the last bailout for them as well, and they have to come up with a serious plan to get their finances in order, or they won't get another bailout, and which is going to put a lot of stress on the energy grid in South Africa as well. I think for me the situation in South Africa right now. I mean, I wouldn't be long rand and I wouldn't be long rand at all. I mean, you can play the text if you like, because we are entering a big zone on the shorter and on the longer term. But you can play the text if you like, but make sure to put stops in place, because I think it can go really hard. I think this dollar rand could get back into, if we don't see a massive turnaround in the dollar, 1860 is your next level, and then why not 19s again? You know, with the mess that they create for themselves and that they are in right now. And then, you know, they are gold producers. Gold is going down. That is also not a great thing. There's a lot going against the rand for now, and so I'm buying dips in that stuff for now.
Yeah, but overall, your correlations are merely just adding or taking away from what you want to do in dollar rand. Like you'd look at gold just as a half an idea of what's going on in gold.
Just half. Yeah, that's probably the least what I'm looking at right now. But I'm really. I think the geopolitical and fundamental situation, just what's going on there, is keeping me away from being long rand. And I may be missing moves, but that's so be it. You know, I mean, we are not here to take all the moves that are going on in all the currencies. As I always say, trading is like going to the restaurant. It's not because you look at the whole menu that you have to eat everything, right?
Yeah. And I hope you're not thinking I'm being too dismissive, Sarkis, with my comments there. As Brand says, euro sterling is a case in point. If euro sterling moves significantly, like we saw yesterday, coming down to 88 handle, pretty large. You look around, what's driving it? Is it the euro weakness driving it, or is it pound strength driving it? And as of yesterday, it was been pound strength. So what wind's blowing that pair. And conversely, if the pound is moving and you think fundamentally that's the wrong move, the UK isn't looking that great, blah, 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 but the pound's getting stronger, then you think, right, well, I'm more likely to trade against that move because I don't believe the fundamentals in the UK are as solid as the market is now showing me. And that's how you trade your correlations and knowing which way the winds are blowing. It just helps you know the paths of least resistance and the paths of most resistance, and then you can assign your risk accordingly to whichever side you want to go on. So hope that's given you some insight there. And if you guys and girls have any questions on things like that, please do let us know in the comments. Love talking about things like that. I'm happy to learn as much as I hope I can teach. So there's always people who can tell me something new. So if you've got something new, correlations or anything you see in the markets, then please come and tell us and let us know. Kay, you got anything to do before we shut up shop?
Yeah, just wishing everybody a safe trading day, and keep your risk control, manage your position. Risk management is the most important thing that there is. You can be really right, but your account will thank you if you take profits as well, at least partially.
Yeah, never be scared to take a profit. And on that note, have a great day. Watch that Japanese data and the stuff tomorrow from the Bank of Japan. Going to be choppy if you're in the M pairs. Please make sure you cover your trades. Make sure you're protected, stops or whatever. And we shall see you bright and breezy tomorrow. Thank you very much.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.